The Fed projects no cuts. The market says we're going to be cutting. Who's going to be right?
In this environment, I would say that the Fed's going to be correct. I think the market has it a little bit wrong here. Look, when we look at the forwards, what the forwards in the Fed funds futures are telling us is that it's increasing the probability that there's going to be a recession at some point. That's why there's a downward slope. The Fed needs to get this job done. Even under their forecasts, they see inflation in 2023 at 3.5%, which is above their target level. So unless something dramatic happens, all else being equal, I think the Fed is going to keep rates at, I think, the 5 to 5.25 level, which is what they told us last week. And I think that they're going to hold it there. And I think that what the market's pricing in is just building in a recession probability. And that's why we see this downward slope in Fed funds futures. And that's what's creating some of the confusion in the markets.
Jim, we've got this cute story of a recovery in the back half and some dreadful news in the front half. Do you think we're oversimplifying things looking out to next year?
I think we are. And look, I can flip that story around and I can say that in the first half of next year, it could be more positive because, look, we already know what the earnings forecasts are. So that's probably already priced in. We know that the inflation's is already peaked and is coming down. We know the Fed's stopping and China may reopen in the first half of the year. So the first half of the year could be the big surprise where it keeps things more positive than what people are thinking because they're so negative. That would be counter consensus. That could be the surprise. And then the second half, we could see inflation not come down or not become anchored, and that could cause the Fed to get back into the game and start hiking rates. So look, this is a very, very confusing, pivotal year for 2023.